Good day. In this short video, we will discuss the recording of a credit sales transaction when a business makes use of the perpetual inventory system. The subsidiary journal where all credit sales of inventory is recorded is the sales journal. Let's have a look at an example. Africa Traders, a registered VAT vendor, buys and sells hand sanitizers. The VAT rate is 15%. All goods are sold at a constant markup of 25% on cost, and the entity uses the perpetual inventory system. On 15 August 2024, Africa Traders sold goods to a debtor, Mrs. Jones, on credit for an amount of R4,600, VAT inclusive. Invoice number 42 was issued. We are required to record the transaction provided in the applicable subsidiary journal of Africa Traders. The first step is to identify the affected accounts. The first affected account is trade receivables control, since inventory was sold on credit and therefore the debtor now owes the business money. The second affected account is sales. The third affected account is VAT output, since the business charges VAT on behalf of the South African Revenue Services. The fourth affected account is cost of sales, since with the perpetual inventory system, the business records the cost of goods sold at the point of sale. In the sales journal, the full amount owed to the business by the debtor is recorded in the trade receivables control column. The amount owed by the debtor is inclusive of VAT. Let's start recording the transaction in the sales journal. In the document column, we enter the invoice number, 42. The date of the transaction in the day column is entered as the 15th. The debtor details in the details column is Mrs. Jones, since the inventory was sold to her, and in the trade receivables control column, the amount of R4,600. In the sales column, we will record the amount exclusive of VAT. The reason for this is that the VAT amount will be paid to SARS and does not form part of the income of the business. The business only collects the VAT on taxable supplies on behalf of the South African Revenue Service. The total amount of the transaction was R4,600. To calculate the VAT exclusive amount, you take the R4,600 divided by 115 multiplied by 100. Therefore, the amount to be recorded in the sales column is R4,000. If we now go back to our sales journal, we record the R4,000 in the sales column. To calculate the amount that should be recorded in the VAT output column, we take the R4,600 divided by 115 multiplied by 15. Therefore, the amount to be recorded in the VAT output column is R600. If we now go back to our sales journal, we record the R600 in the VAT output column. Since the business makes use of the perpetual inventory system, we also need to record the cost of sales. The cost of sales is the cost price of the inventory sold, or in other words, what the business paid to buy the inventory that was sold. In our example, the markup on cost price is given as 25%. Our sales, as calculated earlier, was R4,000. To calculate the cost price, we take the selling price of R4,000 divided by 125 multiplied by 100. Therefore, the amount to be recorded in the cost of sales column is R3,200. If we now go back to our sales journal, we record the 3,200 Rand in the cost of sales column. After watching this short video, you should now be able to record a credit sales transaction in the sales journal of a business making use of the perpetual inventory system. Thank you for watching.